Mortgage update for buyers and home sellers. The Bank of Canada just cut its policy rate by 25 basis points to 2.5%. Now, the bank says the economy has weakened, unemployment is up, and inflation momentum has cooled, so they're easing rates while staying cautious. What are the changes for mortgages in plain language? Well, variable rates. These mortgages track each lender's prime rate, which typically moves with the Bank of Canada overnight rate. So this cut will lower variable borrowing costs once banks adjust prime. For fixed rate mortgages, they mostly follow the Government of Canada bond yields, especially in the 3 and 5 year terms. The yields have been hovering in the high twos, low threes lately, which supports modestly lower fixed rates if that level holds. So do Ontario buyers go variable or fixed rate right now? Choose variable if you can tolerate payment changes and want to benefit if those likely cuts continue. Payments or amortization can still shift with prime, so be comfortable with your risk tolerance and trigger points. Now choose fixed if you value certainty over chasing possible extra savings. And hybrid mortgages, which is split between both, can balance that. Next, will there be more cuts in the coming months? Well, banks and markets economists see reasonable odds of another cut by even the next decision date, October 29th. But as with all of them, it's data dependent. Recent coverage pegs odds near even, and several desks flag a year-end policy rate around 2.25% if growth remains weak and inflation behaves. Of course, I can't confirm the exact path, no one can, but the bias is toward gradual easing. Now, a big question is, will this rate cut stimulate Ontario real estate? Well, the short answer is yes, but a modest yes. Don't expect fireworks, and here's why. National sales momentum was already improving into August. The Canadian Real Estate Association noted activity could pick up further if a September rate cut drew buyers off the sidelines. Now, for Ontario specifically, it's mixed. GTA affordability is still tight and prices have been drifting. Toronto Real Estate Board says further rate relief would help, but constraints remain. That points to stabilization first, and then gradual improvement, not a sudden surge. Big picture forecasts from RBC and Desjardins call for gradual recovery as rates ease and inventory stays ample, again pointing to a slow thaw rather than a spring melt. The bottom line for buyers today, the cuts will improve the math a bit, especially on variable rate mortgages. There is fixed quotes tied to bond yields. Get a fresh pre-approval. Compare fixed, variable, and hybrid options side by side. Bottom line for sellers, expect slightly better showing traffic as borrowing costs inch down and corresponding buyer affordability inches up. But pricing still needs to reflect local supply and affordability realities, especially here in the Hamilton, Burlington, and Niagara areas.